Yes, what's up traders? In this video, I'll show you how to use psychological levels to both anticipate and predict future reversal points in the market. Now, unlike most of the levels we have in Forex, psychological levels have been proven to exist. Check out this research paper. These two guys, whose names I'm not even going to try and pronounce, found that there are price levels, whole integers and halves, which is 500 levels and round numbers in Forex, for which a given stock spends an inordinate amount of time. And if I scroll down, where's it gone? Price clustering. No, it's not that bit. Oh, it's here. And they go on to say, thus we observe an important order price clustering on prices ending in 00 and 50, which is the 500 levels in Forex. Let's get back to the charts. Here's the current psychological levels on Euro USD. I didn't mark these levels myself. I actually used this little setting on TradingView, which you can enable by right clicking, hit settings, then go to the canvas option and select horizontal only in the grid line selector, then click OK. So let's get into how you can use these levels in your trading. Right away, you can see psychological levels are highly respected by the market. Look at how many reversals and reactions happen from the levels. That's because of all the buy and sell orders that have built up around the level due to the order clustering effect. And if we check the order book, we can see most of the buy and sell orders are accumulating around the 1.0800 level, which is where price is at right now. And if I zoom in, you can see wicks have already started to form on the candles coming into the level. So these orders have already been consumed somewhat by these spikes. But more orders are now building around the level because of the little retracement we've seen since last night. And if price continues retracing, not only will we see these orders grow bigger, but we may also start to see orders accumulate at the level above. You can also see how psychological levels have influenced the recent price action, like this reversal from the 112 level. First, we got this big swing down over here, which came back up and spiked up to 111,500. Then we saw another move down, but then we came back up to 11200 again for another two tests, and this is at the psychological level, remember. Then we saw a very, very steep down move, which has continued, although we have seen price retrace from the demand zone at 1.0800 since last night, and is now possibly moving into a supply zone at 1.0900. So that'll be something to watch. So the levels are almost like decision points for the market. Price will return to a psychological level, and then the smart money will use the buy and sell orders that have built up just above and just below the level, like it said in the research paper we looked at. The smart money will use those orders to place their positions against the market. This is why you'll sometimes see price spike down to a psychological level, come back up again, and then there'll be a deeper spike past the psychological level itself. That's the smart money using the different orders that have accumulated at the level to place their own positions into the market. This is why you should always have psychological levels marked on your chart, because it lets you see the points where price might reverse or react. So for example, you could be trading this demand zone right here, but if you don't know where the psychological levels are, you're not going to know if price reverses from this zone, where it could potentially reverse and move down again and then break the zone. But having the psychological levels on the chart tells us, number one, this is probably a strong zone because it's right at a psychological level. Number two, once price comes out the zone, we now know where the different points are where it's going to react or reverse. And to highlight this even further, watch what happens when I take the psychological levels off the chart. I mean, what do we go off on now? All we can use now to see where price might reverse are these old lows and this high, and obviously the demand zone. But when I put the levels back on, it brings the structure back to the market. Let's look at another example. So here we are on USD Japan, And yet again, you can see psychological levels are behind most of the recent reversals and reactions we've seen. In fact, right now we can see prices dipped back under the 150 level, which is probably the most key level on the chart at the minute. Since price could reverse at any one of these psychological levels, we need a method to filter the strong levels from the weak ones, and we do that using Oanda's order book. From the order book, you can see a lot of buy orders have built up around the 149 level, which is just below where price is now. But the more important orders are these red orders here, and these are sell stop orders from traders who have bought above the current price. So even though these orders are at the 149 level, and we'll include this when we mark it on the charts, we also want to include these sell orders here. You can also see a pretty large collection of stop orders at 148 and 147.95. So this will be another level for us to mark on the charts and watch for a potential reversal. So let's go and do that. So for the 149 level here, there was a big spike of buy orders here, but not many sell orders or stop orders. Those were found a little bit lower at the 148.8 level. So we want to mark a zone to include 149 and the 148.8 level, which is where most of those stop orders were located. Not many orders built up around the 148.500 level, so we'll just leave this one because price probably won't reverse there. We'll instead focus on the 148 level, which, if you remember, showed a very large build-up of sell stop orders. Don't worry too much about getting the zones absolutely smack on point. Just make sure it covers the psychological level and any nearby order build-ups. If the orders have mainly built up around the level, just mark a zone with the edges 15 pips above and below the level. So for our level at 148, the upper edge is 15 pips above and the lower edge is 15 pips below. This gives price enough room to trigger the orders and reverse from the level. You can also use price action to gain insights into which psychological level price might actually reverse at. So on USD Japan, for example, we saw that the decline from 150 wasn't exactly substantial. I mean, we had a few bearish candlesticks and stuff, but no massive, significant bearish candles really formed, which suggests there's a lack of bearish momentum, and so that indicates price should reverse around one of these upper levels versus these levels down here, which we haven't seen many orders accumulate around yet. So that's how you can use psychological levels to anticipate future reversal and reaction points in the market. Mark any nearby psychological levels on the chart, then check Oanda's order book to see how many buy and sell orders have built up around the level, as you'll need to include these when you draw the zone, and then you draw the zone around the level. These are now your key levels and zones heading into each trading day, and as price moves away or breaks psychological levels, you can just check the order book again and mark new zones based on where price is now and how the orders have built up at the new location.